Welcome to Stock Updates. Lucid Motors is moving, and we're here to break it all down, from stock updates to the latest EV news, expert insights, and market trends, everything about Lucid, clear and simple. If you love the EV revolution and Lucid Motors, you're in the right place. Stay tuned and never miss an update. A big factor on investors' minds right now is interest rates. Many people are glued to the Federal Reserve's next moves, waiting for signs of rate cuts. Today, we actually got several important pieces of economic data: durable goods orders, GDP figures, and weekly jobless claims. Each one of those reports came in stronger than expected. Durable goods showed growth of 2.9%, far better than the forecast of a negative reading. GDP growth clocked in at 3.88%, again surpassing the expectation of 3.3%. And initial jobless claims came in at 218,000 versus the forecast of 240,000. On paper, these numbers paint a picture of a resilient, expanding economy. Normally, you'd think that strong economic data would fuel a market rally. But here's the catch. The stronger the economy looks, the less likely it becomes that the Fed will rush into cutting rates. In fact, right after this data hit the wires, the market's expectations for a rate cut at the upcoming October 29th meeting shifted downward. The probability of a cut dropped from 92% to about 85.5% almost instantly. That kind of swing shows just how sensitive traders are to every economic report. To me, though, it seems premature to hang everything on a single meeting that's still weeks away. October 29th may feel like it's around the corner, but in the world of markets, that's a lifetime. So rather than fixating on whether the Fed cuts rates by a quarter point, it's worth asking, what do these numbers really mean? The answer is simple. They point to expansion, not contraction. And for a company like Lucid, which is still carving out its space in the electric vehicle industry, a healthy economy is arguably even more valuable than a modest rate cut. When you take a step back, strong GDP growth, steady job numbers, and robust durable goods orders all signal that consumer demand is holding up. That environment supports automakers, especially those trying to break into a competitive space like electric vehicles. For Lucid, better marketing and strong consumer spending power could outweigh the temporary impact of slightly higher borrowing costs. Yes, lower rates would help with financing and affordability, but if the economy is humming, it creates the kind of environment where innovative products like Lucid's cars can gain traction. And that's why I think this pullback could very well be the type of moment where institutional investors quietly step in. Once the market officially opens, don't be surprised if we see a sudden reversal higher, fueled by big money scooping up shares. Of course, nothing is guaranteed in the stock market. Things could go the other way. But when you line up the data, it's hard not to see the positive side of this story. Now, looking ahead, tomorrow brings another big moment, the release of the PCE report, which measures inflation. This is the Fed's preferred inflation gauge, and every time it comes out, the market reacts. Traders will likely overanalyze every decimal point, and volatility could spike. For Lucid investors, that's something to keep on the radar. While we wait for economic data to shake out, let's turn back to Lucid itself. Recently, an article surfaced highlighting that Lucid is having a tough time in Europe, particularly in Germany. Now, this isn't breaking news from the company. There haven't been official SEC filings about it, but it's still worth discussing. According to the piece, Lucid is considering a shift toward a dealership-style sales model in Europe. Up until now, Lucid has preferred a direct-to-consumer approach, which keeps more profit in-house but requires significant infrastructure and brand recognition. Moving to dealerships could help the company expand faster in markets where it hasn't yet built a strong foundation. Of course, dealerships take a slice of the pie, which could put pressure on margins in the near term. But if it helps Lucid establish a foothold in places like Germany, it might be a trade-off worth making. Keep in mind, Germany isn't just another European market. It's one of the toughest and most competitive when it comes to cars. Cracking that market could be a major milestone, even if it means sacrificing a bit of short-term profitability. And it's not like Lucid hasn't been trying. Just a few months ago, the company created a dedicated team in Germany to focus specifically on fleet sales. Clearly, leadership recognized that progress in Germany was slower than expected. By adapting their strategy, they're signaling that they're willing to adjust course in order to grow. On the home front, there's also the matter of federal EV incentives. Right now, the $7,500 credit only applies to leases, and starting at the end of September, Lucid will have to front that credit themselves until the end of the year. While this is a burden for the company, it also demonstrates strong customer service. Lucid is essentially saying, "We'll cover this for you," which could help build loyalty at a time when buyers are comparing multiple EV options. The uncertainty around future policy adds another layer. If certain credits are rolled back or removed under different administrations, companies like Lucid need to make sure they're not overly dependent on government support. Expanding internationally, even with the challenges in Europe, is part of hedging against that risk. Let's shift gears to another critical piece of the puzzle: short interest. During the pre-market, short positions increased by about 78,000 shares. That brings total short interest to roughly 32.31% of Lucid's free float, which equals more than 40 million shares. To put that in perspective, the all-time high short interest was about 33.4%. We're now just a hair below that record. Think about what that means. Nearly one-third of all available shares are being bet against. That's an extremely heavy level of pessimism. Twice a month, exchanges update the official short interest numbers. The most recent disclosure, covering activity as of September 14th, showed 42.1 million shares shorted, or 33.58% of the float. Platforms like Ortex use this data and extrapolate it forward, which is why we're now looking at just over 32%. This matters because extreme short interest creates tension. On one hand, it reflects bearish sentiment and pressure on the stock. On the other hand, it also sets the stage for sudden upside if shorts are forced to cover. For long-term investors, this tug-of-war can be frustrating, but it also creates windows of opportunity when sentiment flips. Now, while I don't want to get bogged down in technical jargon, it's worth mentioning that bears are eyeing further downside, possibly toward the $22 range. That's based partly on expectations that GDP would disappoint, which it clearly did not. In fact, the data came in stronger than anticipated, undermining the bearish thesis. Right now, the stock seems to be holding in a zone of support, and there are resistance levels slightly above where it's trading. It's been bouncing within a range, which isn't unusual during times of heightened uncertainty. Despite lower trading volume recently, Lucid has shown surprising resilience. It's acted independently of broader market moves at times, which is encouraging for those who believe in its long-term story. So, let's pull this all together. Lucid stock may be down today, but the bigger picture suggests that the fundamentals of the economy are supportive, not threatening. Strong GDP, solid job numbers, and healthy durable goods orders mean consumers are still spending and businesses are still investing. That kind of environment is fertile ground for a growth company like Lucid. The challenges in Europe are real, but the shift toward a dealership model shows that the company is willing to adapt in order to gain ground. Meanwhile, the situation with EV credits and incentives in the U.S. highlights how Lucid is balancing customer needs with policy uncertainty. And let's not forget the massive short interest hanging over the stock. While it creates downward pressure, it also opens the door for a potential squeeze if sentiment shifts. In my view, this pullback could be exactly the kind of moment that long-term investors look back on as a golden opportunity. Of course, the road ahead won't be smooth, but then again, it never is in the stock market. What matters is whether you believe in Lucid's vision, its ability to adapt, and its place in the EV landscape. All content on stock updates is for educational and entertainment purposes only. We do not provide financial advice, investment recommendations, or suggestions to buy or sell any stock or asset. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Information shared on this channel is based on news, publicly available data, and market commentary, which may change over time. We are not responsible for any financial gain or loss resulting from the use of the information provided here. Thanks for watching Stock Updates. So that's where we stand today. I'd love to hear your thoughts. Do you see this as a chance to accumulate, or do the challenges outweigh the positives? Drop your comments below. If you enjoyed this video and want to stay updated on all things Lucid Motors and the EV world, make sure to like, subscribe, and turn on notifications so you never miss an update. We love hearing from you, so don't forget to share your thoughts. See you in the next video with more news, insights, and analysis. Stay charged and stay informed.